This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
So Matt, Dave Ramsey would be proud. You know how he always talks about having no credit score. Do not want a credit score. Well, I think he might have had such a profound impact on the credit industry that they came out with a new credit scoring system. So
really?
Yeah, so it doesn't matter if you have credit cards, don't have credit cards, you are still going to have a credit score. You don't have to go out and get debt, essentially, to develop a credit score. And here today to talk to us about that is Miss Sarah Perkins with Blue Water Credit. Good morning, Sarah.
Good morning.
So talk to us a little bit about this new scoring model that's rolling out. And let's start with kind of how it came to be. Like why is there now something challenging FICO?
Yeah, so I mean, a lot of people have heard of FICO. It's been around forever. It's been used in like 90% of lending decisions for decades now. And it came up from the Fair Isaac Corporation, and they essentially took the information from the credit bureaus, Experian, Equifax, and TransUnion, and created the scoring model. Well, the credit bureaus were kind of like, well, hey, this is our information. Why don't we come up with our own model to compete with the FICO score? So it's been around for a little bit, but since July, Fannie Mae and Freddie Mac gave the okay to start using it for mortgage lending decisions.
Oh, wow. So Vantage has been around for longer than July.
Yes. So if you look at Credit Karma, Credit Sesame, those are the scoring models that are typically used for those scores. So they've been used, but they really haven't been used in the world of lending, but more of just kind of an educational credit score.
So when Fannie and Freddie said it's okay to start using Vantage, that's kind of when the scores become more popular, like when people are paying attention to it more.
Correct.
And so Fannie and Freddie, they're the major people who originate loans or back loans. And so is anybody officially using Vantage? Because I know that it's one thing for Fannie and Freddie to say, yes, let's do it, but it's another thing for like lenders to start incorporating it.
So being that it just rolled out with the okay in July.
And it came out of nowhere, right, in July? It wasn't like they planned it in July.
So it's been in the works for a couple years because they have been looking at data to make sure that it is predicting defaults and riskiness of borrowers. So they were taking a look at loans given during the pandemic and applying that scoring model where FICO was the scoring model and seeing kind of how it compares. And the real neat thing was it actually predicted about 50% more defaults than FICO did. So I think with that kind of data, they said, hey, let's roll this out. And it became a scoring model where people that didn't use the traditional credit and getting into debt, those people have a better chance of now being able to create a credit score and get into the home buying market.
Wonderful. So, yes, let's talk about that. What makes the Vantage score better for people who have low or not low, but little credit history?
So the one thing that Vantage does is it incorporates rent, utilities, and cell phones bills that you can put onto your credit to help create a credit score. Those things, we have seen them on the credit bureaus, but FICO usually doesn't recognize them in mortgage lending decisions. But with the Vantage 4.0, they are recognizing those kind of payments and trying to reach a different demographic of people that don't traditionally use a credit card. The other cool thing with this score is you only need 1 month of some type of credit history to create a score, where FICO required you to have 6 months of credit history. So now you can get into the market even faster.
That is really cool. So rather than taking 6 months, it takes 1 month. They're already pulling your utilities, your cell phone, and so now they're compiling the score.
Yes.
To hopefully then qualify for a mortgage.
Yeah, and another cool fact was when they took someone who had a 620 score with Vantage versus a 620 score with FICO, the 620 score with Vantage actually had less defaults and better lending capabilities to go to those people than the FICO did.
That's a good point. So are the numbers the same?
The numbers are the same as far as what the range is, but they do kind of look at they look at the same things, but they weigh those things differently as opposed to credit utilization, payment history. So they assign different weights to those categories, which can help fluctuate the score to go one way or another.
So a lot of FHA type lenders or loans, you need some, and I'm not a lender, I just pretend to be one on radio, but a score above 580, 620, somewhere around there. are those the same kind of guidelines with the FICO score versus the? Because I understand what you're saying. Like, so they are weighing different things differently. So a late payment might be weighed less with Vantage than with FICO. The length of time that you've had credit might be weighed differently between FICO and Vantage. But would they still qualify with the Vantage score at 580, or would that number have to be higher?
See, I don't know if that's going to be left up to the individual lenders or FHA, but
too soon to tell.
Yes, too soon to tell. But right now, if you go head to head with like a 620 score, you're better off choosing someone with a Vantage 620 score than a FICO 620 score.
That's so crazy.
Yeah.
So crazy. Okay, so Dave Ramsey, you may be having a positive impact overall. People can just use their utility bills, which they're going to have, cell phone bills, which they're going to have, and they don't have to go out and essentially buy a credit card or get into debt.
Correct.
Or start building that credit score. Well, when we come back, we will be talking about. Actually, let's not come back. Let's just keep going.
Okay.
FICO's fighting back because what happened was, as you briefly explained, TransUnion, Experian, Equifax, they're pulling the data. FICO has been using that data for a long time to create this score that we're all familiar with, our FICO score. But now those three credit bureaus are saying, no, you know what, we're going to create our own score and we're going to call it Vantage. And FICO doesn't like that very much. So what's FICO doing?
Yeah, there's a little bit of drama going on in the credit world right now. So a couple things that FICO did is they are now saying that they're going to incorporate buy now, pay later type of accounts onto their scoring model.
It's like the Klarna type of a thing?
The Klarna, the Affirms, the Afterpay. So again, they're targeting a demographic maybe that doesn't traditionally use the credit card, but trying to use these type of mini loans to help people create scores. So again, one thing that they're trying to do to compete with the Vantage score. Another thing that just came out, I think it was like 2 weeks ago, typically a lender would go to the credit bureaus to pay to get the credit report and the credit score. And that information is ultimately from FICO. Well, FICO said, you know what? No more. We're cutting out the middleman, and you guys can come straight to us and pay us for those credit reports and credit scores. They're offering it, I think, for a little bit of a discount, trying to push people more towards staying with the FICO score as opposed to the Vantage. And then you got Equifax and then fought back and said, well, hey, we're going to give you the Vantage score for no cost at all. So it's kind of really shaken up, and we'll have to see how it turns out.
Credit wars.
Yes.
Oh my gosh. But at the end of the day, I think this is good for the consumer from I'm being explained.
Yeah, correct. I think it's creating a healthy competition. FICO has had a monopoly on the industry for way too long. Again, they haven't been able to incorporate people that are rural areas, maybe the younger generation that are maybe just hesitant to get into debt. Again, thank you, Dave Ramsey,
there you go.
for that. But that doesn't mean that they are risky borrowers. And so I think this is going to be good for the home buying industry in a whole, because you're going to have more qualified people that are going to be able to go out there and purchase a home. More
qualified and better qualified, like you said during the pandemic, 50% higher, was it delinquencies or bankruptcies?
They were able to predict 50% more defaults. And then right now, when you look at the two scores, they probably are 4% better at determining who's risky and safe between the FICO score, which doesn't sound like a lot, but when you're talking about millions of loans, that 4% makes a big difference.
Absolutely. So a lot of people are worried about an 08 happening again, like loosening credit restrictions. Anybody can get a loan, but that's not what's happening here with Vantage. They just have figured out a better way to unlock more potential buyers who are still very qualified, who can still legitimately make the mortgage payment. It's just now we're looking at the problem differently.
Yes.
So now more people can qualify.
Correct.
Wonderful. And then this is also good for buyers who are like on the bubble or maybe have last minute things coming up on their that pop up on their credit score, because you said it can sometimes take longer to get things removed with FICO or to build a credit score with FICO.
So one thing that Vantage was trying to do was not penalize the consumer for like these one-off late payments. It happens. Someone misses one payment because life happens. The auto pay got mixed up. We've seen people where the mortgage increased because the escrow account wasn't covering enough, and then they weren't paying enough for their mortgage payment, and it became late. So that's where Vantage stepped in and say, hey, we're not going to penalize you because one missed payment can drop your score 100 points with FICO. I think I was telling you a story. I had a gentleman out of the Bay Area, had a $1.8 million loan, qualified for it.
So starter home in the Bay.
Yeah, of course.
Yep.
And so he's getting ready to close. And just like every home buying process, they check your credit one more time before you close. And unfortunately, all of a sudden, there was this brand new collection that popped up for an AT&T wireless account. And he had no idea what it was. Unfortunately, he was so far into the process, he wasn't able to back out. So he had to take a higher interest rate, and his mortgage essentially went up by $1,000 a month. Ouch, for sure. So then he came to us and said, well, I don't want to keep paying this extra $1,000. I need to take care of this collection. So I was able to negotiate the amount down, plus get a deletion. So now his score has bumped back up 100 points, and he's working with his lender on how quickly he can refi.
Crazy.
Yeah.
And so does that happen often, though, like the whole random thing popping up?
It does, especially when you're talking about these Comcast, wireless, type of accounts, because they're notorious for being placed with a collection agency. That collection agency will report on your credit report for a couple months, and then they will pull the account back from that particular collection agency and then place it with someone new if they aren't able to collect it. Well, if you're not checking your credit regularly, which most people aren't, you might not even notice that that's happening. So maybe with this gentleman, when he went to go qualify for the loan, it was in that in-between process where it wasn't reporting on his credit report, and then it happened to get placed with a new agency and then popped right back up.
Man.
So those are the type of bills and collections that we always recommend taking care of, because even if we can get them removed through like a dispute process, it doesn't mean it can't be placed with another agency who by law can then re-report it to your credit report.
So you can dispute it with one collection agency and then it gets moved to a different collection agency?
Correct, yeah.
Oh my gosh. So you're saying just pay it, figure it out.
Pay it. Hopefully they will agree to a deletion. If they don't, those are the type of things that we work on at Blue Water Credit.
Got it. But that's so... Bringing it back to the Vantage, if they were using the Vantage model, that one random little thing would maybe have not impacted his credit score as much?
Possibly. That is a collection. They're more forgiving on those one-off late payments,
Okay.
but there are scoring models out there. If you pay a collection, your score will go up. Right now, like if you pay a collection on the mortgage scoring model with FICO, it's the same as having an unpaid collection. So you're not rewarded for paying a collection off unless it gets deleted. So there are some different variations of, how they count those type of accounts between the Vantage and the FICO models.
Well, hey, let's talk about that when we come back. Ways that you can boost your credit scores, ways that Blue Water helps you with all that, and ways that you can do it for free. Back after this.
So as we enter the scary season of Halloween, I'm sure nothing scares you more than putting your house on the market, right? Because you've got all of those repairs that need to be done to get your home ready, right? Like the backyard, the front yard, not to mention everything in the house, the kitchen, the bathroom, the floors, the garage, the plumbing, the electrical. Well, guess what? Here comes Johnny Jennings and his team at Made for More Realty. They're like the Ghostbusters. They're going to take away all those fears and worries and scares when it comes to selling your home, because they have this amazing program where they can sell your home in as-is condition. In fact, even better, they're going to give you at least 3 cash offers on your home in as-is condition. That means you don't have to do any costly home repairs, no staging, no organization, no open house. I know what you're thinking. It's too good to be true, but it's not. Many folks have taken advantage of this great opportunity, but it won't last very long. There's a reason why they have over 1,000 5-star Google reviews. It's because they get homes sold fast and for the most money possible. So if you're looking for a way to make it less scary, an easy, simple, fast process, just Google Johnny Jennings with Made for More Realty and find out how you can get more for your home.